Banks are announcing partnerships left and right. Institutions are supposedly buying millions worth of XRP, and everything looks great. But your portfolio still looks the same as it did just about 6 months ago. Really, all of 2025, been hanging out about $3 for XRP. And so now people are starting to question, well, has XRP peaked? Is this the ceiling? Is this as good as it gets? The short answer is no, but there's a lot more to it. So I'm going to show you why the current price action is calm and why it's really kind of the calm before the storm. What's happening behind the scenes that could trigger the biggest wealth transfer you've ever seen? And we'll talk about why the price is not moving, why it will move, and more importantly, to where and when. I get messages all the time asking, is it still going to happen? When's this going to happen? Or there's a lot of people that will FUD XRP and say that, well, market cap's already, $130 billion. That's way too high. If it were $10 XRP, it'd be worth as much as Apple. There's no way that it could 10x from here. And then you got other cryptos pumping while XRP maintains its, price stability here around $3. We've had years of, sideways movement before we stepped up this year in 2025. The case is over at this point, and we still haven't seen the institutional adoption that people have been waiting for. There's other people that talk about, the billion XRP that Ripple dumps onto the market each month out of their escrow, which isn't really true. They actually release the majority of that back onto the end of the escrow, and only put onto the market what they need to maintain price stability, which is the whole function of XRP and their S. Other things, like if banks are really using it well, why isn't the price moving? Retail just gets impatient. It's a long game, and I've seen a lot of people start to sell. And so that SY, I want to talk about this video today and what S going on to help you make the best decisions for you and your portfolio. And now, we're just starting to see Bitcoin S dominance start to fall, and the rotation that we've been looking for into all the altcoins. So, buckle up, sit down, hang out to the end of the video, and we'll go over and dispel all of these myths and why XRP can go much, much higher. So let's start with the market cap myth. Okay, there's a lot of people that look at the market cap of XRP and they compare it to stocks, and that S completely wrong. Okay, XRP isn't a company. It's a protocol, and it's really the token on a protocol that moves the value. The protocol is the XRPL, or the XRP ledger, and market cap of protocols works very different than equities. Imagine the email protocol, for example. How many emails do you think move around the world every single day? Probably hundreds of billions of messages that get sent between counterparties. I mean, just alone myself, I receive hundreds of emails per day. If all of that was moving just $1, what would that be worth? That would be a lot of money moving around. So the value of these protocols and networks comes from transaction volume. It's not going to be speculation like it is today. So the next thing is, we know that institutions are accumulating XRP because, well, it's a lot of people that have filed for ETFs, and there's restructuring that's going on there. But for them to average in, they need an amount of XRP to be able to back that when they launch. So why haven't we seen huge price swings? Well, institutional buyers buy through different means than retail, okay? When you're moving large amounts of money into the market, oftentimes they will use TWWP or VWAP. TEAM is a time-you-weighted average price. So let's say if you had $100 million, you're going to spread that over 3 weeks of purchases. 1, so that you get the best price over that time frame, and 2, so that you don't have to deal with all the fees and slippage that it would cause if you dumped all of that on the market at one time. They wait for dips, they accumulate slowly, and they avoid the slippage and the additional cost of averaging into the market, or what it would be if they had one big buy. They also use OTC, or over-the-counter. And these deals happen off of the exchanges. Buyers source large liquidity from other private buyers, and that happens through these OTC desk and dark pools. Institutional accumulation is designed to be invisible. They don't want the volatility while they're buying positions. They want to be in before the volatility. FOMO is what causes price to move substantially when there's a huge amount of volume and purchases all at one time. If you're averaging into the market, that's how institutions accumulate. Smart money accumulates during the boring sideways movements like we had for XRP for years before we stepped up to this $3 position. And now they've been doing the same here in 2025. This is exactly what an accumulation phase would look like on a chart if you're a TA person. Once they're done accumulating, That's when the big markup's going to come and price is going to move exponentially higher because they want the upside. They don't want to be the ones that are chasing and FOMOing into green candles that missed out on the buying opportunity. And we're really at a point here in 2025 that it's the perfect setup for XRP to move way higher than today. If you've watched any of my other videos, you might be able to go back on the channel here and check it out. The reverse carry trade and the domino theory that I've been talking about for over a year and a half is really the culmination of the perfect storm for XRP adoption and the price to move exponentially higher. And the crux of that is Japan's reverse carry trade unwinding. It's going to be a global margin call. There's been trillions of dollars borrowed at 0% interest that all be rushed back to be repaid on the other side of this when that trade no longer makes sense. When their interest rates in Japan continue to rise and the yield that people are producing in other markets globally starts to fall. Started to see this last year in August of 2024. Early in the month, we had a correction of 13% a single day in the S&P 500. And then the Bank of Japan came out and says, "Oh, whoa. You know, we're not going to continue raising interest rates while there's market volatility." And it is a really good thing that they did that, because the stablecoin bill had not been passed at that point. And if we did see a flood of US treasuries from foreign debt holders move onto the market, it would have completely destabilized the bond market and the dollar would have had huge issues. But now here in 2025, we do have stablecoin regulation that was passed this summer with the Genius Act, and we know that about $2.30 trillion is what they expect for the demand of stablecoins here in the US, which just happens to be almost the same amount that out there for foreign debt holders of US treasuries. Japan being the largest of those with 1.6 trillion in US treasuries. So when this unwinds, there's going to be some other dominoes that fall. And one of those, I think, is going to be Tether USDT, not their new stablecoin that they just rolled out, USAT. That is going to be compliant with the US regulations in the Genius Act, but the original Tether, not everything on that balance sheet is backed completely. Well, it's backed, but it's not with US treasuries like is required by the Genius Act, okay? Okay, so there could be private credit, there could be other debt and bonds on there could be other things aside from US treasuries. Even though they are the 16th largest holder of US debt at this point, they've been a great partner for us to be able to soak up other people, selling off those treasuries globally. They've been a great proxy. But I think the time for that is coming to an end, and it's going to correlate with an unwind in Bitcoin and other currencies as well. So if we have that happen, and there's something that on Tether, balance sheet, that were to be destabilized by the reverse carry trade unwinding, and that could cause another liquidity crisis across all the crypto exchanges. There's over $100 billion in Tether that's out there in the market right now, supporting a lot of different assets, including the majority of which I think is BIT. We've got the Bitcoin ETFs, right? We've seen a huge run-up in Bitcoin's price. It was at the all-time high even before the halving in this last cycle. We've got to $125,000 for Bitcoin at this point, which is a huge jump from where it was, at the beginning of the year. So there's a lot of market risk at this point for Bitcoin that didn't exist 2 years ago before the ETFs. We've got pension funds. We've got sovereign wealth funds. We've got many other large financial institutions that have exposure to Bitcoin that just did unexist before these ETFs. And if there were a situation where Bitcoin were to unwind and drop 30, 40, 50% in a very short period of time, they would need to be able to de-risk from those positions. What if that happens on a holiday? What if it happens on a weekend? That leads to huge unrealized losses on the balance sheets of these institutions. And the only way that they are going to be able to de-risk from that is to be able to move to real-time settlement. Back last year in 2024, on May 28th, the DTCC moved to T+1. That means they settle 1 day later with that money. They have the option in that update to be able to settle real-time via a digital asset, which would be T, plus 0B same-day settlement, which would allow them to de-risk those positions because Bitcoin settles 24/7, 365. It takes 30-45 minutes for it to actually settle between most counterparties and enough. Transactions on the network to actually have been validated to confirm that that's settled are 3 finalized project. ION with the DTCC back in 2022, and it is able to settle all the transactions between the clearinghouses and the brokers real-time via a digital asset. And the primary settlement mechanism for R3 and CAD is, you guessed it, XRP. And why would they choose that when they VA put out other announcements about Solana and some of these other networks that they re-looking at working with? Well, XRP is the only thing that actually has clarity here in the US because of the lawsuit between Ripple and the SEC on July 13th of 2023. The judge issued the ruling that XRP in and of itself is not a security. Until we have the Clarity Act passed here in the US that actually gives congressional regulation around what S a security and what S not, the only option for this would be XRP because it is the only legal settlement mechanism here in the US that we know. Ken is not a security. So, but how do they get XRP's price to a high enough point that it would actually be able to settle the back end of the stock market? I mean, it's $600 trillion, $5 or $6 trillion a day in daily settlement on the back end of the stock market between the clearinghouses and the brokers. Well, the answer is simple. The ETFs WVA had a ton of applications for spot ETFs for XRP that have been pushed back and delayed and delayed. We need them all to launch at the same time. I know people have been frustrated by that, but this needs to be a coordinated effort to be able to drive XRP. It's priced to a high enough price that it has enough liquidity to settle back into the stock market and save the day in this situation. And BlackRock, I think, is going to be the one leading that charge. Back in November of 2023, there was an iShares Trust ETF for XRP that popped up on the Delaware website, and mysteriously BlackRock never made a statement, and neither did Ripple about that being fake. It was only Bloomberg that came out and stated that they had talked to somebody at BlackRock, and it was a fake U. There's no ETF filing. And they were going to get to the bottom of it, and the DOJ was investigating, and then nothing ever came of it. We never heard about it again. So it's possible that that trust and that structure is still just sat there in the background waiting to be used in an emergency situation. So all of these things have been strategically put in place again like dominoes. They all fall at once in order to be able to push XRP's price to the level it needs to be, and hold it there because of the volume and settlement that LL then be moving over the network. And you know, you never let a good crisis go to waste. But that's not even the biggest price potential for XRP, you know? The reverse carry trade unwinded and all of the other things that could culminate here at the end of 2025. I think somewhere between, on the very low end, $50 to $100 XRP is kind of a pit stop that I see happening. But it could very well be for digits even here in 2025, if all of this were to play out. That doesn't get into the long-term price predictions for XRP. In the next 3 to 5 years, we're very likely going to be able to tokenize the derivatives market. And that's where the money is. The notional value of the derivatives market today is somewhere between, on the low end $400 trillion, and on the high end, up to 4 quadrillion. And nobody can assess how much is actually out there, because there is no accounting mechanism across all of those bets, because that's what they are. They're really bets in the derivatives market. Nobody can also quantify the risk. This is why we had the financial crisis in 2008. People couldn't actually quantify the exposure they had to the collateralized debt obligations that they had packaged up and shipped off and traded between one another. When the mortgage market started to collapse on itself and the underlying collateral that was sold, as you know, these AAA loans were not, ninja loans and all the other crazy stuff that was going on back then, it fell apart on itself. You always want the base of the derivatives market to be risk-free assets. And that's why now it's required that they have US Treasuries, which is a Tier 1 asset designated by the BIS, and you could probably use gold as well. So how are they going to do this? What is anybody working on this? What does that even look like? Well, one of the products that Ripple was working on early on was called Cody, and some people say that that's been disbanded and it's no longer being worked on, but the website is still there and it says it's in beta, so we'll see if that's the case or not. But Codis is a platform for smart contracts for derivatives. And if Ripple was working on it, it would be, it would make sense that XRP would probably be the settlement letter for all of those smart contracts. Like a sidechain, like an EVM sidechain on the XRP. And if it gets the settlement of all of these derivatives, again, 400 trillion all the way up to $4 quadrillion, daily settlements are going to be astronomical. It would require a price of somewhere between $10 to $50,000 per XRP, and that's not speculation. That's actual utility and demand that would require XRP's price to be at those high levels. And again, people on the market cap side are going to lose their minds for that one, because it's going to be in the pent for 4 market cap once we get to that point. So the crazy part there is, we'll see the adoption of XRP and its other markets and applications, whether it's, SWIFT transactions or the back-end settlement of the stock market or FX or commodities. Derivatives will dwarf anything that it's been used for prior to that. And the price would need to be a very high stable price to be able to settle all of that at scale every single day. So this is my premise in thinking that XRP does end up becoming a tier 1 asset risk-free. It's basically the underlying backbone, just like US Treasuries is today, for the entire financial system. And you need to think about this again on volume and settlement. It's not speculation. Speculation is never going to drive the price of XRP to these levels. It's not possible. It doesn't matter how much, DATs are out there or other stuff people trying to lock up supply. It's going to require that the demand come from these markets to be able to settle these transactions. The institutional adoption at scale is going to change everything that you've ever thought about digital assets and XRP. So inevitably, I know people are going to ask, what's the timeline? All this stuff, right? Well, Japan is again the crux, the canary in the coal mine. It is everything that's going to cause this to start to unfold. It's a catalyst that could happen any day now, here at the end of 2025. And the reason for that is, they already teetering right on the edge of having to raise interest rates here in October 2025. It is expected that they are going to have to do that. And I know that they don't want to be the problem child, the people that cause this to unwind and be blamed for a global catastrophe. So I think there's going to be something else that causes them to react and aggressively raise their rates higher. And I believe that's going to be oil. There is going to be a situation in my mind that happens with Russia or Venezuela, or the Middle East, that causes a significant trade route or something else that Japan is dependent on for their oil to get cut off. And the spike in the cost of energy across their economy would cause massive amounts of inflation. The only way that they can mitigate that for their population and their people is to raise interest rates aggressively, which would then be again the catalyst that would kick all of the rest of this off. And now again that we have the Stablecoin Act already passed here in the US with the Genius Act earlier this year, we know that there's demand for those treasuries that are going to flow onto the market. When Japan's bond rates go above the US bond rates, we re-looking to lower interest rates here in the US at the end of 2025. So our rates are coming down. Japan's rates are going up. At some point there is going to be an inflection point where it makes more sense to hold Japanese bonds than it does US bonds, which is great for their economy. It'll pull them out of stagflation and all the problems that they've had over the past 30 years. But it's, a massive unwind for everything else. It's 50 to 60% down in the stock market. Gold's going to take a hit. Crypto's going to take a hit. It's not going to matter where you have money. You will lose value. It's going to be a massive repricing across all asset classes, all at the same time. It's potentially for XRP. So again, with the standardization of the ETF process that the SEC has now proposed for cryptos, or spot ETFs for cryptos, there could be an onslaught and people just ram their ETFs through all at the same time. Again, that trust is sitting there in Delaware that BlackRock supposedly had a fake filing for back in November 23rd, ready for them to run at the market. And I think that they could be the leader and the driver on the XRP when we do get this approval. And the wild card that's in the mix here is the government shutdown at the end of 2025. It's going to be very difficult for them to pass the Clarity Act if the government shut down. Congress won't be in session to be able to pass that law or that bill. And so again, the only thing that could be used in that situation is going to be, you guessed it, XRP, because the only thing that has clarity here in the US is not a security to be able to settle all of that volume. And that's why I think they're going to funnel a ton of liquidity into XRP. It's causing a supply shock to drive it to the levels that's going to be required to save the day in this situation. And alongside that, you have all of this transition happening here at the end of 2025. You have banks looking to switch to blockchain settlement. You've got ISO 200,022 becoming mandatory here at the end of the year in November. And that doesn't mean instant settlement. So people get confused about ISO. It's a messaging standard for the banks. It is a precursor to the ability to move to instant settlement.